All right, today we're digging into Nike's latest earnings report. Now, on the surface, the numbers tell one story, but trust me, what's happening underneath is way more interesting. So let's get into it. So you look at a brand like Nike, this global icon, and you'd think their quarterly results would be pretty straightforward. But when you start to peel back the layers, you see a company that's really at a major crossroads, and they're facing some serious headwinds. Okay, so let's jump right to the big headline numbers, because right away you're looking at a contradiction. It's a real puzzle. And here it is. This is the central mystery of the whole report. Check it out. Total revenue is up just 1%. So basically flat. But then you look at their profit, and it has absolutely plummeted by 31%. So how on earth is that possible? How can you sell about the same amount of stuff, but have your profits just fall off a cliff? That's the big question we're going to answer. You know, the CEO's own words here really frame this perfectly. He's basically saying, hey, we're making some progress here and there, but things are messy. It really just sets the stage for a company that is right in the middle of a huge and kind of bumpy transition. So to solve this whole profit puzzle, we've got to start by following the money. Let's break down that revenue number and see exactly where Nike's $11.7 billion actually came from this quarter. And whoa, this is where it gets really interesting. This chart shows a massive strategic pivot. See, for years, Nike was all about pushing its direct-to-consumer business, selling directly from their website, their apps, their own stores. But look at these numbers. That's a complete U-turn. Their direct sales are actually down 4%, while sales through their wholesale partners, think Foot Locker, are up a really strong 7%. Yeah, and this is no accident. The report literally says they're reinvesting in wholesale. What that tells us is they're using these retail partners to help clear out a bunch of old inventory, which then makes room for all the new stuff they want to launch. It's a very deliberate, calculated move. Now, if we zoom out and look at the global picture, the story gets even more complex. North America and Europe, pretty decent growth, but then you get to Greater China. Oof, revenue there dropped 9% and earnings, that's EBIT, just cratered by a whopping 25%. That is a massive critical market, and right now, it's acting like a huge anchor on their overall performance. Okay, time for the main event, that 31% collapse in profit. To really understand this, we need to talk about something called gross margin. It's an absolutely crucial number for any company that sells physical products. So to put it simply, gross margin tells you how much profit a company makes on each individual product it sells before you factor in stuff like marketing or corporate salaries. So if this number goes down, it means the company is fundamentally making less money on every single thing that goes out the door. And yeah, Nike's gross margin took a pretty big hit. It fell by 320 basis points, which, that's just Wall Street speak for 3.2 percentage points. Going from making about 45 cents of profit on every dollar in sales down to just 42 cents? I mean, that might not sound like much, but when you're selling billions of dollars of stuff, it is a huge drop that slams your bottom line. So why the big squeeze? Well, the report points to three main culprits. First up, they had to use bigger discounts to get rid of all that old inventory we talked about. Second, that shift towards selling more through wholesale partners, well, that's usually less profitable than selling directly to you and me. And finally, they got hit with higher import tariffs in North America, which just makes their products more expensive to bring in. But this profit problem isn't just about costs and discounts. Oh no, there's another huge piece of the puzzle hiding inside Nike's own brand portfolio. When you compare the main Nike brand against its other big brand, Converse, you see this dramatic split in performance. And I mean, the contrast here is just stark. The core Nike brand actually held its own. It was up 2%. But Converse, its revenue collapsed by a staggering 27%. That is not a dip, that is a free fall for such an iconic brand. And this isn't just a problem in one country or region. The report is really clear that Converse sales are down everywhere, across all territories. It's a global problem for the classic sneaker brand, and it is seriously hurting the parent company's results. Okay, so we've diagnosed the problems, right? Squeezed profits, a big strategic shift, and a struggling Converse brand. So the real question is, what's Nike going to do about it? What's the game plan to turn the ship around? Right off the bat, Nike's leadership is being super careful to manage everyone's expectations. The CFO here is basically saying, look, this is not going to be a quick fix, it's going to be a bumpy road. The message is clear, the path to recovery is not going to be a straight line. So here is the plan. They're calling it their Win Now strategy. It's all about clearing out that old inventory, shifting their own website to focus more on full price items, and then reinvesting in their wholesale partners. And this is a big one, they're going to spend more on marketing to get people really excited about the Nike brand again.
So we've seen the problems and we've seen the plan. But here's the billion-dollar question that's left hanging. Can this win now strategy actually work? Especially in a tough economy with more competition than ever. This report shows Nike is making some big, bold moves. But whether they'll actually pay off, well, that remains to be seen.